What's up, traders? Matt from the Trade Brigade here with your weekend crypto report, where as always, I do a technical analysis and give you my thoughts on the coins listed up above. We have removed Luna USD from the watch list simply because it is delisted. It's trading at fractions of a penny, no longer worth keeping an eye on. Kicking things off as we always do on our Bitcoin daily time frame, what do we see on this chart in front of us? Certainly a daily bear flag. Okay, this is when that depegging nonsense took place, and now we're currently getting consolidation at a lower price point. What I find interesting about this is that we are hovering right around that 30K Bitcoin mark, which, as we know, if we scroll back through history, is a very, very important area of support. So I would say that a majority of the consolidation is actually taking place underneath it. And instead of, relying on 30K just as a nice round number, I think we can be a little bit more specific than that, right? Obviously, your breakout is going to come from a failed bear flag here, up and over $31,300 per coin, and further breakdown can come from underneath these lows around $28,650 per coin. So that's what I would really continue to monitor here for inside of Bitcoin. Again, in a bear flag scenario, we are favoring bearish outcomes, and our next support underneath is coming from that wick low around $24,100 per coin. That's really what I would expect into the upcoming week if we get a breakdown of the flag. Obviously, if it fails to resolve lower, anything that moves higher out of the top could technically be looked at as a double bottom like this. Chalk the wick up as an anomaly. Capturing that neckline should bring us to the next number here, $34,350 per coin, which, as we know, also has some serious significance as the bottom end of this range right here. Remember, interaction 1, 2, and obviously we broke it on the third test there. So nonetheless, stuck in a range, balance rules are in play, and we're just going to be patient, right? There's a couple of outcomes that can happen here, either a breakout or a breakdown. We covered both of those outcomes, or we could also have a look below and fail, in which case, if we get one day bar that closes underneath and the very next day we close back above the bottom end of that range, that triggers a look below and fail. And as we know, the target should be the top end of the range here, $31,300 per coin. The same is true but opposite and can happen at the top end of the range. So we get a break like this, immediately fail back down into the range, so a close back down underneath that 31,300 mark. And it's the exact opposite scenario, looking for the bottom end of the range to act as target here, $28,650 per coin. So those are the Bitcoin scenarios that I'm watching for. It's quite simple. Whenever we have a range, it's just patience. Don't get chopped up in here. Wait for the larger move either up and over the top or down and out underneath the bottom. Considering the overall trend of things, I think this would be a favored outcome, of course. Let's continue along and see what's going on in Ethereum. Very similar picture here. Scrunching up the chart just a little bit. Let's get rid of that level. We will keep this one on, and just like we did in Bitcoin, let's go ahead and identify our range for our sort of consolidation that we're stuck in here. Let's adjust this level down to truly reflect the bottom end of that wick, and there we go. That's looking a little bit better. So breakouts can happen up and over 2148 if this is going to turn into a double bottom, as we just pointed out on the Bitcoin chart, or in light of the current trend and pattern that's unfolding here, bear flag certainly. Breakdowns can come underneath 1924, continuation into the lower wick from that panic depegging day around 1692. Anything after that, let's scrunch up the chart and just quickly identify that our next support is coming from here at 1362 underneath us. If there's a major reversal, it would really require recapturing 2310 with a higher low and breaking the resistance trend line before I would even think about shifting my bias in Ethereum back to long for something that moves back into this overall range right here. Right? So that's Ethereum in a nutshell. Obviously, downtrend is in play. Bear flag is in play in almost every single coin that we're going to look at in today's session. Continuing along, Binance Coin. What do we see here? Let's clean up the chart just a little bit. This is getting a little bit too hectic for my liking. Let's remove the lower wicks. There we go. That is no longer going to be in play. We can keep the top end of the range. Obviously, these upper levels are not really in play. Our bear flag is looking something like this. Okay, so there's your breakout point for upside up and over 311.50. Brings us to the back test here, really the scene of the crime as well, at 357.90. That's if we get a break of this level in the first place, or if we're looking at this in the light of a bear flag, which again, many things are looking like, then breakdowns probably occur underneath 285, 286 to bring us into the low around well, let's see something here. This was obviously prior support. Yeah, okay, so this is a significant level here. The lower wick of that candle is a little bit more of the anomaly in this case. I would certainly target on a breakdown of the range here, that 258.70, and then if things really do get going and cook into the downside, then yeah, you can use the low of the wick as your next target, but one step at a time here. I would keep things realistic and probably look for that first. Again, just remembering the significance when we scrunch it up of all of these major touches from back around in here, May, June, July of last year, of course. So that's what we've got in Binance Binance Coin, again, favored outcome would probably be bear flag consolidation, resolves to the downside. This indecision doji here at the top of the range isn't really giving us a whole lot of conviction one way or another. I would point out it's very, very nuanced, but if we were looking at this on something like a smaller time frame, this is a little upper wick here is technically a fake breakout, right? So maybe it is a micro look below, look above and fail, and the target should be here, but one step at a time. For better trades, wait for a daily bar close outside of that range that we've just identified. Continuing along, Cardano. What's going on in this one? We know that this has been weak for oh so long. I mean, this is just an absolutely hideous chart, guys. There's no reason to really be fishing for a bottom in this just yet. We have a lower low. Again, we're sort of consolidating in a bear flag, something that looks like this. We don't technically have a, well, I should say we do have a higher low, but not yet a new higher high. So to truly flip this to a short-term uptrend, and we would probably only classify it as an uptrend on a smaller time frame chart, like a 30-minute, hourly, something like that, it would require the new higher high up and over this level right here at 59 cents, okay? So not technically in an uptrend yet. If it does do something like this and create a new higher high, technically speaking, it's a higher low double bottom over the neckline, and then again, your target's going to be here at 77 cents. So that's one possibility, but given the overall context of the crypto market right now, I'm not sure I would carry it forward as a highly probable scenario. I wouldn't even really look for shorts underneath this level in here. I would rather wait to see, can we do something like this, build out a larger flush point, so more of a descending triangle type look at that 41 cent mark. So equal lows in here that stack up as a flush point. Look for the breakdown there. And what do we have for supports underneath us? Ooh, nasty move there in Cardano, probably coming back down to the prior consolidation lows from right around in here. If I just zoom in on this section of the chart, you can see how that was prior support there. And if we zoom out back over, whoa, to the current bar, apologies for that. Whoa, I am sorry. All over the place with the keyboard shortcuts. Back to Cardano and zooming in with the command feature so it stays in the middle of the screen. There we go. That's much better. Sorry for that confusion, but nonetheless, now that we've got things settled, you can see, again, if we get the descending triangle, something that does this, lower highs, flat lows, boom, breakdown takes you there 27 cents, then we would reevaluate the chart. All right, moving along with precision now. We're going to click on Solana USD instead of pressing the space bar and going crazy through our watch list. What do we see here? Certainly the same sort of idea as what we just discussed in Cardano. Bear flag is in play down here. We do technically have the higher low starting to form, right, from here to here, but we do not yet have the higher high. So if this is going to flip to a new uptrend, let's do something like that to identify the neckline of the potential pattern. This doesn't really carry as much significance going forward anymore. We're going to remove that. And instead, if this breaks, I would probably just favor a look into the resistance trend line, right? That would be the target here on an upside move inside of Solana. And then if that breaks, look to fill up the triangle here into this level where the breakdown really stemmed from, right? That's going to be 80, let's round it up and call it 83 just for round number's sake. Again, the same sort of idea would apply to Solana as what we just discussed in Cardano. I would love to see something that does this, descending triangle, and then a breakdown becomes more attractive of 44 to get us into, what do we have for support underneath us? Wow, okay. I'm not necessarily convinced that it comes all the way down to 20 in one fell swoop, but what do we have from in the past that could provide some sort of reference point? I'm thinking maybe here. I'm thinking this might be something just based on, okay, all of these prior touches here, high volume node as we move through there, resistance, high volume as well through that. So 39, how does that stack up in relationship to current price? Yeah, that was the wick of that big downside move. So actually, in talking through this with you guys, maybe 20 is the ultimate target here on a breakdown if that does turn into a sort of descending triangle here inside of Solana. So carry those forward. And again, we're walking through this in real time, figuring it out together. This breakdown area in general opens the door to 20 as we've just seen. And again, if this will turn into a higher low double bottom, neckline needs to break and the resistance trend line is the target. Continuing along, Polkadot, what do we see in this one? It's going to be a very similar story across a majority of these coins, right? You can clearly see we are underneath this pivot low from in here. Let's remove that. We can be more precise with the current levels. And this $6.99, so $7 even, is holding up and being respected quite nicely, noting that it was a prior set of highs, break, retest, and then off to the races in there. So I like that level. Let's zoom in on the more recent price action and kind of see what else we can learn about the more nuanced range. Okay, so here is your breakout point, obviously up and over 1180. If that happens, then fine, higher low double bottom in play, looking for that next higher high. And the target is the breakdown point from here, 1443. Strikes me as a decent long trade if this pans out to the upside in the first place. But do remember, the trend is your friend, and the trend here is clearly to the downside. So I would prefer to look at this in the light of high, lower high, lower high, lower high, rolling over, trying to come back in for the equal low down here around that $7 mark. If that happens, then we have a big H pattern, right? Any subsequent lower high, boom, you're looking at that as a flush point, third interaction, and you're lower underneath that $7 mark for. Let's see if we can find a target together back here when we were trading in this pretty sideways range, I would say. Let's see what we've got. So this strikes me as the next potential level around 550 coming from prior flag support, resistance, kind of resistant in here as well. That would be my next level of interest here inside of Polkadot on the breakdown should that happen. And again, just remember, trend is your friend. The only reason to get long on some of these setups is if these break, these necklines essentially break on high volume, on decent momentum, right? Crypto.com coin is up next. I believe they're just calling this Kronos now, Cronos maybe. Nonetheless, underneath the ICO, right, from back in here. So everyone who bought it, no matter where you bought it at any point in time, underwater on the position. Building out a bear flag that is much more on par with what we saw in Bitcoin and even Ethereum, much less of an H pattern currently in play. The consolidation is much tighter. So because of that, we have a breakout point here at 20 cents. If it wants to move higher, the back test of the flush point here and sort of scene of the crime at 26 cents is your target. So 6 cents on 20. I mean, I'm not very, what is that? Just roughly 20 to 25%, right? Maybe it's something worth watching out for. Or if it breaks down from the flag, you're just looking for a flush underneath 17 cents to continue on down into oblivion. I really just would not touch it if it breaks down from this flag. Obviously, we have no technical supports underneath us. And considering that, again, as we discussed in last week's video with the Luna debacle, that crypto isn't backed by a quote unquote hard asset, there's no saying how low this could potentially go, right? How low can you go? So nonetheless, Crypto.com coin bear flag favoring downside outcomes here. But if there is a break of 20 cents, maybe there's a 6 cent pop that could be had. Next up, we've got Matic USD. What's going on in this one? Anything worth paying attention to? Certainly strikes me as much more of the higher low, something that looks like this. What were we looking at? Polkadot, Solana, those look more on par with this sort of shape here. Nonetheless, let's adjust our levels so they're a little bit more accurate to the current price points that will be reactive. Up and over 73 cents brings us to the scene of the crime up there around $1. Remember that $1 is also a nice psychological mark to be playing against. And to the downside, better breakdowns probably just come from underneath there, 60 cents even, of course, targeting your wick low at first at 48 cents. Then underneath that, we have 29 cents coming from this consolidation low in the prior balance period from back around in here, March, April, May of last year. All right, so that's what we've got. Obviously, again, favoring the bear flag here, resolving to the downside. All of these current candles that are printing are kind of indecision dojis, not giving us a whole lot of insight into current direction. But again, remembering trend is your friend. Downward is the favorite outcome in many of these charts. Mana USD, let's speed it up a little bit here. This one actually, look at this. So coming in for the back test already. There's the regular stock market bill. I'm sorry if you could hear that. Nonetheless, what do we see here? If we get a move up and over this, that does start to confirm a new uptrend, right? Low, higher low, high. If we can get a high, new higher high, that confirms the new uptrend. Again, probably more easily persuadable on something like an hourly 30-minute time frame to look at it in that light. On the day time frame, obviously, just completely getting beat up, getting some, but not, as of right now, the higher low is forming outside of this prior balance area, which to me is fairly interesting. So on this one, I would certainly just watch this $1 mark, $1.05, generally right around in here, remembering what we just saw off to the left of the screen. If we can consolidate above, that strikes me as a healthy step here for Decentraland, just not falling back down into this prior area of consolidation where there was a ton of price acceptance. So consolidation above here looks promising, and then favor breakouts up and over 135 for a next test at 182. That to me would probably be the favored outlook here inside of Decentraland in terms of how we're playing this. Again, remember trend is your friend and it's clearly down. So, if this does break down, just step aside and let this thing come back down to the bottom of the range here around 50 cents and then reevaluate. The only reason to play this thing long is if it stays in this range, does not come into this zone, and then resolves this to the upside. That's your long entry up and over 135. Next, we've got AVAX for Avalanche. What's going on in this one? Certainly more of that sort of H pattern look. Let's adjust some of our levels so they're a bit more accurate here. Let's take this tool out. Breakouts can occur up and over 36.75. If that happens, scene of the crime is up here. Back tests of 54.50. That could seem reasonable over the course of time. Again, higher low double bottom, break of the neckline takes us higher. Currently, 2 indecision dojis off the highs of the range, so I would not favor that as a likely scenario. Instead, as I've been beating the dead horse, trend is your friend, probably looking for lower breakdowns of this 29, get us to the wick low from in here at 22.35. And then from underneath that, the big sort of rounded bottom lows around 9.24 could be in play, noting there's not a whole lot of structure as we made this move higher through, what was that? Let's see, August of last year, right? So be careful inside of AVAX if we do start to break down underneath that 22.35. Not a whole lot of structure until we hit 9.24. All right, that's what we've got there. And then last but not least, Ape USD. What's going on in this one? The bear flag persists. We get another instance of it right here, of course, coming in, H pattern, whatever you want to classify it as. Some of our levels are a little bit more defined in this particular coin. I would start to treat this as a pretty sketchy zone. I wouldn't want to be too active in there, noting that it was a big low end of balance from right around in here. Instead, if we can get into this zone, accept, and then break out above, that's the better trade, probably coming from up and over 1050 to get to a back test of 1416, which was the top end of that overall range from right around in here. Also a little bit of a hang up before rolling over and moving through it, of course, with the depegging action. To the downside, flushes can come from underneath around 750, and I would say, based on what we currently see on the chart in front of us, this actually does look a little bit more bearish. This is much less of an indecision doji, and instead starting to build out as a sort of inverted hammer. And as I'm speaking, it's slightly ticking up and building more of a lower wick, but nonetheless, as this closes out, if it closes out as more of an inverted hammer, of course, you are favoring downside play here, looking for, of course, our two double bottom lows around $5.08. Just call it $5 even here inside of Apecoin. So that is going to wrap up our weekend crypto report. Lots of bear flags everywhere. Trend is your friend. Seems to be headed lower out there. Price acceptance is lower. The only instance that we're looking for longs inside of crypto is if we can take out the necklines in many of these patterns, but it does require some patience first as we quickly check back in on Bitcoin. Obviously, we're trading lower in the range as opposed to back higher. That's going to wrap up the video. If you enjoyed it, leave me a thumbs up or a comment down below. And with that being said, I wish you all a green trading week.